So finally, we come to the most exciting part of financial statement analysis, or how to basically read the books of your companies. Up till now, we discussed in detail using real world companies like Amazon, Facebook, Google, all the big companies we all know of. We use their real world balance sheets, cash flow statements, income statements to understand how to look at these companies as well as our companies by looking at their financial statements. We understood that income statement is not there to just look at the bottom line. There are ways to interpret income statement very differently so that we can really understand what is actually going on in our business. We understood when it comes to balance sheet that what are current assets and current liabilities and how it affects our day-to-day working. And finally, we understood that one of the most important statements to understand what is actually going on in your business is cash flow statement. And cash flow statement is the statement which tells you how well you are running your business, where your money is going, and how much money you are putting in growth. So let's see how we can use financial statements to get real insights about our business. Now, there are certain markers or pointers I suggest that will really help you understand your business. First of all, understand what is the gross margin in your business. That is, how profitable is it for a company to sell one additional unit or to provide one additional service? If you have low variable cost of production, then as your sales grow, your profits growth will explode. You know what it means? It basically means that your business is really scalable. Business with high gross profit margins have huge profit potential. Why? Because they are scalable in nature. If you have high gross profit margins, then the more you scale your business, the better your profits will grow, because your fixed expenses, that is your other operating expenses, are usually more fixed in nature. And if your GP margin is high, the more your profit will grow, that is your net profit will grow. So for example, a way of understanding GP margin, software companies, if they say that the GP margin is 40%, that means for every additional unit that software company sells, it has to spend only 60 rupees in making that unit. That is another way of looking at GP margin. The second part, which we discussed in length in income statement, was operating margin. What is left after operating expenses like selling, general and administration expenses, which have been deducted from gross margin. These operating expenses cannot be traced to individual single units of revenue or the individual single units of service, but these are extremely essential for your business operations. So what do you gain when we compare GP margin, operating margin? We gained a sense of scale of operating expenses. Like I said in the first point, in the gross margin point, if your business is scalable, that means there's not a huge difference between GP and operating margin. The more your business scale, the more you will have a higher profits. Why? Because operating expenses have a unique feature that they are more or less fixed in nature. Like we discussed in income statement, even if your sales increase by 10 times, that doesn't always mean that the salary of your employees will increase by 10 times, right? The third one, which I love to discuss when we discuss about cash flows, was free cash flows from operations after capex. Like we discussed in cash flow, profits are not equal to cash. Profits, net profits, and cash flow from operations are two very different things. In fact, many of the companies get a very, very good market share. Market share means in the stock market, they get very high prices of their stock because they have much higher cash flow from operations than their net profits. So when you are finding out free cash flow from operations after capex, you are basically finding a measure which is extremely important when it comes to valuing your company. Later in the class, we will take real world examples and we will calculate cash flow from operations after capex of one of the most well known and well respected companies in the world, like Amazon, Facebook, Tesla, Google. The fourth one, which we all know, the bottom line. net margin. What net margin basically says what? It says what the owner is getting out of every dollar of revenue. Now in reality, like I showed you income statement, it is actually not a very clean measure. To really understand your business, you need to have a holistic picture of the entire financial statements. What I mean by that, you need to understand what are gross profit margins, what are operating margins, what are cash flow from operations, and not just look at net margin, which most of you are doing right now. You are just looking at the net margin and ignoring the whole picture. So you basically are looking at trees but missing the forest. So it is worthwhile to check operating margin and net margin. If operating margin was high, right, and the net margin is low, then the difference can be because of debt, because you have maybe taken too much debt, and those debt payments are reducing your net margins. It means that your business is profitable, but you are basically earning for your debt holders because all your profits are taken by lenders. So if your net margin is very low and your operating margin is high, that means you are burdened with debt, one of the worst burdens in your business, and you are basically earning for your debt holders. So this is very important to understand the relationship between gross margin, operating margins, net margins, and free cash flows from operations after capex. Now, there are two new things which I want you to introduce before wrapping this thing up. And that is return on equity and return on invested capital. Now, these are two very new things which I have not discussed till now. But trust me, like cash flow, this is actually one of the most important things which majority of business owners don't even think of. So let's discuss what is return on equity and what is return on invested capital in the next class.